The next big battle on Capitol Hill will be over the debt ceiling. It's a fight Timothy Bitsberger has fought before. Tim was a senior Treasury official in the Bush administration. He had to make the case for raising the debt ceiling against similar threats from Democrats, and he says this fight is once again a matter of financial shenanigans. Tim is now a managing director at BNP Paribas, and he is here with us on the Inside Track. Tim, good morning to you. Look, brinksmanship, I've got to pronounce it correctly, over the debt ceiling is nothing new, right? The Republicans do it to the Democrats do it to the Republicans. As I say, you've been there before. Does it feel different this time?
Yes, it does. On the one hand, there's definitely a lot of political theater involved. On the other hand, the United States has to respect the full faith and credit of the dollar as well as of our debt. So for that reason alone, the debt ceiling has to be increased. However, this time it feels like the political rhetoric, the fight over the budget battles is just really only beginning. So, I expect the Republicans to extract as much blood as they can as these debt limit negotiations go forward.
Should anyone, though, be really concerned if John Boehner himself, the Speaker, says that he understands, he acknowledges that the consequences of failing to raise the debt ceiling would be, quote unquote, very serious? He just said that yesterday. He's the Speaker. He's running the Republican Party in the lower house. Surely he represents something.
Well, yeah, this is the ultimate game of chicken, and they each know they're all going to have a pretty good idea of what the final day is, what that final deadline is, and they're both going to go to the very, very end until someone takes the car and swerves off the road. So, yeah, I'm sure the Speaker of the House as well as the Democrats, understand the severity of it, but it's a tough one.
But do they? I mean, for example, do the Democrats believe what Tim Geithner, the current Treasury Secretary, says when he says the consequences of failing to raise it would be catastrophic? An opinion you share. Do you think that the Democratic Party, the rank and file of the Democratic Party, really get that and are really willing to play chicken as aggressively as the Republicans might be?
That's a great point, because I've always felt that the U.S. has been in this kind of empowered status as a borrower of unlimited, potential and means.
Exorbitant privilege,
Exorbitant privilege. And right now we're in a period where we have, interest rates, the Fed funds rate essentially at zero. So the cost of growing the government, the cost of, having federal outlays go from about 18% of the government to 25% of the government over the past few years has been very small from an interest cost perspective. So one of the things I worry about down the road would be a raise in interest rates, and then really that would be a devastating hit to the budget as well as to social services.
I want to focus on these freshman Republicans for a moment, because you really have to sympathize with them in a sense. I went back and looked at some of the stories in which you were quoted as a Treasury Department official making the case for raising the debt ceiling, and at that time, we're talking about only 7 years ago, in fact less than 7 years ago, the debt ceiling was in the order of $7.4 trillion. Now it's almost double that.
Right.
In the space of 7 years. No wonder people are outraged.
Well, the deficits grew in the Bush administration, and the deficits have grown in the Obama administration. As I said, they've gone from about 18% of GDP, federal outlays, 18% of GDP to 25%, and that is just not sustainable. And so some draconian measures need to be taken, whether it's Simpson-Bowles or the Ryan plan. Everything needs to be put on the table. Everything needs to be looked at.
Where should the focus be, though? Much of what the Republican Party outside of Paul Ryan is arguing for right now is short-term cuts. Paul Ryan wants to take on the big enchilada, right? $4-6 trillion, whatever it is, over the next 10 years. But you and I know very well that this battle is going to be fought over the 2012 budget, not really addressing the entitlement problem long term.
Right. Well, someone's always going to make an argument that today's not the right day to tackle the big issues. You're always going to hear that. But to put these problems down the road it's just not going to work. Future generations will pay.
We are speaking with former Treasury Department official Tim Bitsberger. He is currently a managing director at BNP Paribas, but in one of his former jobs, he had to argue for raising the debt ceiling, a big battle that lies ahead in Washington the next few weeks. Tim, let's talk about what we might hear from the president tomorrow night. We heard over the weekend that he may address this issue of entitlement reform and try to take the momentum for budget cutting back from Paul Ryan of the Republican Party. What do you think? Do you think that the president has any hope at this point of doing what the international community says presidents have failed to do for several years, which is outline a credible plan for medium-term debt reduction?
I remain skeptical. He's coming up in and he has a re-election in a short time period. I think he's probably going to talk about raising taxes for the wealthy. I don't really see much of a change, which is really unfortunate because you had Simpson Bowles, you had a bipartisan commission recommend just putting everything on the table except for Medicare, and so I hope the president reconsiders and is open to new ideas.
Let's talk about what you're hearing from the international community. You've just returned to Wall Street after, call it, a 12-year hiatus. You were with Salomon Brothers at one point, the last job before you entered the administration. Now you're with BNP Paribas. You're talking to central banks. You're talking to sovereign wealth funds. You're talking to foreign government agencies. What do you hear from those people about confidence in the Treasury market and the U.S. dollar, both of which hang in the balance should the debt ceiling not be raised?
Well, it's almost a love-hate relationship, I think. On the one hand, the central banks, they're running, a lot of them are running pretty big surpluses, and they need to invest in large liquid markets. So, and what's the largest, most liquid
than the
treasuries?
Market,
exactly.
Right?
So that's where they're very comfortable investing. I think they have complete confidence in the full faith and credit of the U.S. I think I see some concern over the political outlook and the long-term budget picture, but I don't see that affecting their day-to-day investment patterns. For example, we still see a lot of robust investment in treasuries, despite the fact that the dollar's down, 10% over the past year or two.
Why? Why don't these concerns, or why haven't these concerns over the deficit, the debt, and now the debt ceiling been more reflected in Treasury yields?
It's still the United States, and interest rates are, the Fed funds rate still is at zero. So, a 10-year note at, 3.5%, give or take, I think does still represent some value to these players.
What do you think is going to be a bigger catalyst for a backing up in Treasury yields? The failure to raise the debt ceiling, or ultimately the hard end, presuming there is one, of QE2?
I actually think QE2 is going to be a tougher end. I think that all of a sudden to put brakes on a pretty big asset buying program, I think this is something that really hasn't gotten quite enough attention in the markets or in the press. The markets are very used to the Fed coming in on a very regular basis, taking securities out of the market. You couple that with just concern over maybe inflation. So I think the long end of the curve is could be in some peril.
Tim, thanks so much for joining us here and talking to us about the debt ceiling, the Treasury market, and much more. We'd love to have you back. Tim Bitsberger of BNP Paribas, former official in the Treasury Department.